Hey everyone, welcome back to Corporate Decoder, the place where we turn complicated corporate filings into something you can actually understand. Today we are diving into FISERV's latest report. Spoiler alert, there's some interesting debt shuffling going on, but are they really making more money or just moving things around? Let's find out. FISERV just released their financial report for the first 3 months of 2025. That's January, February, and March. This report tells us how well the company did in the beginning of the year, but the first thing to notice is their claim that all's well on the Western Front. FISERV is a big company that sells technology and services to banks and businesses, so it's a good idea to understand if their claims are true. First, let's quickly cover what this report is all about. It's called a 10Q, and it's something that public companies have to file every 3 months to keep everyone updated on how they're doing. Think of it like a pop quiz for businesses. Alright, let's dive in. The report kicks off with the usual formalities, company names, addresses, and what kind of stock they have. All standard stuff. Here is the index, but we can skip straight to the important financial details. Okay, now we're talking the consolidated statements of income. Basically, this is where we see how much money FISERV made and spent. Their revenue, the money coming in, is split into two main parts, processing and services, which brought in $40 billion, and product, which made $85 billion and $85 billion for the quarter. Not bad, but remember, we want to see if they are growing. If we look at the same time last year, the report says that the previous revenue was $4.83 billion. This means they made $247 million more this year, an increase of about 5%. Of course, making money costs money, so we need to check their expenses. Their costs are split into a few categories, the big ones being cost of processing and services at $139 billion, cost of product at $684 million, and selling, general and administrative expenses at $1.682 billion. After subtracting all the expenses from the revenue, FISERV's operating income, which is basically profit from their main business, was $1,035, a big number, but what are they doing with it? Then we have interest expense, which is what they paid on their debts, other expenses, and finally net income attributable to FISERV Inc. The final profit after all the counting, the net income attributable to FISERV, was $851 million. If we look at the profit per share, which is important to stockholders, it was $1.51 per share. In the world of big finance, this is just a snapshot of the financial health of the company, but it might not represent the full picture. Now let's jump to the consolidated statements of comprehensive income. This is a bit more detailed than the previous financial report. This report takes into account a few more things, for example, currency swings and fair market value adjustments. You see things like foreign currency translation, which deals with how the money they make overseas changes in value when converted back to dollars, which affects overall value. At the end, what you get is a comprehensive income. In their case, it's just $1.091 billion. But let's remember, this is just income. In real life, people don't look at these reports, they look at the balance sheet. This report gives us a snapshot of what FISERV owns and owes at a specific point in time. You've got assets, what they own, like cash, accounts receivable, and equipment. Then you have liabilities, what they owe, like accounts payable and debt. And finally, you have equity, which is basically the company's net worth. So for FISERV, their total assets were $80.42 billion. Compare this to their total liabilities of $53.81 billion, which means their total equity, the worth of the company, is $26.5021 billion. And finally, let's check the consolidated statements of cash flows report. It is a summary of all the money coming in and going out of FISERV. The most important parts in the report are the net cash provided by operating activities. That is how much cash the company generated, which here is $648 million. Then net cash used in investing activities, where they spent money on things like buying companies or equipment for $925 million. And lastly, net cash provided by or used in financing activities, which involves the banks, lenders, and stockholders for $627 million. For example, debt proceeds and debt repayments refer to taking or paying out loans. Settlement activity, net, refers to the exchange of payments and money. And treasury stock is related to any stocks buybacks. Putting it all together, we see what's called net change in cash and cash equivalents, basically how much their cash pile grew or shrunk over the quarter. Here, their cash increased $336 million. Now, the reports then go into detail on accounting choices. Not everyone's favorite, but it is important to understand how they calculated some of the results. They also mention allowances for doubtful accounts, basically how much money they don't think they'll collect. Then goodwill, which is an intangible asset, the good reputation of a company. Derivatives, which are bets on the future value of something like currency. Speaking of currency, they use fixed-to-fixed cross-currency rate swap contracts to protect their investments in other countries, which is interesting. Next, we can talk about what they acquired, which may affect their numbers. In March, they bought a company called Payfair for $95 million and another company called CCV for $229 million. After that, we get back to the interesting part, the debts. Its short-term debt is about $1.281 billion and their long-term debt is over $27 billion. Then the report mentions derivative instruments again to hedge against those currency value changes. And of course, they have to talk about commitments and contingencies, which is really just legal stuff. Last but not least, the big segments of the company are merchant, the one dealing with stores and vendors, and financial, the one that handles transaction processing and anything related to finances. But what does this mean in real numbers? In the end, their business segment operating income is $810 million for merchant and a staggering $1.148 billion for financial, but not everyone can be as lucky as the financial segment. And finally, the signature of approval, and that is all now for my take on FISERV. I think FISERV is in an interesting spot. They're clearly growing, but a big part of that growth is coming from acquisitions, basically buying other companies. The underlying organic business doesn't seem to be bad, but it doesn't seem to grow as fast. Their debt is something to watch out for. While they're making enough money to cover it, a sudden economic downturn could make things difficult. Overall, FISERV seems like a stable company in a growing industry, but they need to be careful about debt and make sure those acquisitions actually pay off in the long run. Thanks for watching. If you found this breakdown helpful, hit that like button, leave a comment, and subscribe for more deep dives into the world of corporate finance.